We have Hang Seng, which is up around 60 points.
Inflation for the month of November is indeed below 6% after 11 long months, coming in at 5.88.
Don't chase the opening is, probably the better way to play it. Wait for the intraday dip, as has been the case for the last many days.
If we see the operating numbers of the JP assets till FY19, at least the 5.5 odd million ton, which is in the standalone books, we're operating at 85% utilization.
Actually, about 30 points higher. That's the first tick on the index.
We have been a bit cautious on the market here.
The ownership and management has been separated at Landmark since the beginning.
Bandhan Bank has received the first tranche of money from the insurance that they had claimed earlier.
Both companies, both on quarter-on-quarter as well as on a year-on-year basis, we are still anticipating we will show a decent industry-leading growth.
The Nifty is now up close to about 50-odd points.
Dalmia Bharat, they've gone ahead and they've got JP Group's cement assets. So that's a good deal, right? But will it go through in its entirety?
चाइना के इस प्रयास का हमारी सेना ने दृढ़ता के साथ सामना किया है, अध्यक्ष महोदय.
Because of geopolitical considerations in the world and various factors, the subsidy amount has gone up.
Nifty at the day's high, 100 points higher there.
Well, that was the day so far. You're with us here on Closing Bell. I'm Prashant. With me, my colleagues Reema and Nigel. Guys, hi, good afternoon. It's a firm day, and the market is, actually almost flying away, right? So the price action is not being mirrored exactly with respect to what we saw overnight, but this is still quite good. About a 0.4% gain, that's 76 points on the Nifty. So putting some distance between where the market is now and as compared to the 20-day moving average, which is where the Nifty closed yesterday. By the way, the next level to take out is nothing but last Friday's high, which is 18,665. And we'll see if that comes or not. Banks continue to outperform, both private and public, but I think it's really the public sector banks which are flying away. 3% today, 12% in December so far, and counting. This is quite something. I mean, the weakest of the PSU banks are rallying on. Catch up within the space with respect to what is better quality and higher rated names there. IT is firm, and we'll talk more about that. 2 days of relentless selling. Friday, of course, we saw that big sell-off. Yesterday, there was some more follow-through. Today, the index is up a little bit. US CPI, the consumer price inflation number, of course, out of the US will be the big Q. That's for the month of November. And I think that usually tends to excite markets, lively price action post that. So we'll see as we come back tomorrow morning. Reema, hi.
Hi. So the high on the Nifty was about 18,608. We hit that around 110. So in the last 1.5 hours, we have given up a little bit of a ground, close to about 35 points on the Nifty. And that's because the banking as well as the IT stocks have seen a bit of a slide from the top just in the last 1 hour. So still going strong on the Nifty banking space, but you can see the high was somewhere around 1215. And even on the IT index, just in the last 1 hour, we've seen some profits being taken off. The IT index, by the way, has rebounded after 7 days of fall, not just 2 days. It's been 7 days of a relentless downward move in the IT index. So today you are seeing that bit of a pullback. The Nifty IT index is up close to about 200 points. Just a quick check on the month-to-date performance. As we've been saying, for the Nifty, we're down 1%. Banks, Prashant referred to it. The Nifty PSU banking index is up 12%, and the Nifty IT is down close to about 3.5%. And talking about individual PSU mid-cap banking stocks, Punjab and Sindh 96% higher in this month itself. Central Bank, Dhanalakshmi Bank, UCO Bank, these are stocks which have seen a rally of close to about 45 to 50% in the month of December. So I guess, Nigel, these PSU banks, which have been long forgotten and ignored for a greater part of the last many years, are having this last hurrah in 2022.
Well, that's right, Reema. The year has belonged to them, and I think that under-ownership theme again played out for them because everyone was too bearish on it, the exposure was less out there, and suddenly they have been the big re-rating candidate. So the PSU banking name, just take a look at that. All of that flying away in trade today. We'll discuss more about the PSU banks, but before that, let's just a quick word on the index. I believe that we're still in a range of close to around 300 points. The battle on which side we're going to move from around 18,600 is very crucial. So we have a 150-point premium between the 18,600 call and the 18,600 put. So 18,450 on the downside, 18,750 on the upside. So let's see how that goes. But for the time being, we're trading well in the green. Reema?
Okay, let's tell our viewers then what we've lined up for them on Closing Bell today. Dalmia Bharat slips on likely profit booking a day after it inks a deal to buy cement assets of JP Associates. some concerns on clearances and closure of the deal weigh. More details coming up on the show. Tata Motors is gaining in trade as the company is looking to divest part of its stake in subsidiary Tata Technologies via an IPO. Details on what lies ahead for Tata Motors and all that you need to know about Tata Tech coming up on the show. Macrotech Developers is losing in trade on the back of real estate demand concerns amidst global inflationary fears. Key excerpts from our conversation with the management coming up on the show. We'll track the market technicals with Jay Bala of cashthechaos.com. And finally, Trideep Bhattacharya of Edelweiss AMC will be joining in to discuss his top portfolio bets.
Okay, well, what should you do on the index and specific stocks in the last hour? That's a question we'll put to Mitesh Thakkar as always. Mitesh, hi, good afternoon. Good to have you here. So we've seen a bit of a up move. How would you treat this and would you go long here?
Good afternoon, Prashant. Yes, there's been a good bounce back. Yet, I'm waiting for a reversal signal, which could happen once we get past 18,620, 630, and the day's high is around 18,608. So not very far away from there. At least what is good is that the overbought readings have been taken care of, and now I think we are close to normal readings. And now if we start getting about 18,620, then I think the move would have more strength, and we'll see good follow through. So waiting for that to happen. Till then, trading with long bias on stock specific basis. ITC, I think after a correction is showing signs of reversal, so that's a buy with a stop just below levels of 341 for targets of 355. And Indices Bank is a buy as well. Keep a stop below levels of around 1210 and a target of around 1260 on the upside can be looked at.
Okay, all right. Thanks a lot for that, Mitesh. Let's get in Siddharth Sidani, who's joining us on the show. Hi, Siddharth. Good to have you on the show. Well, Siddharth, we want to discuss a whole host of stocks with you. But first up, let's talk about one of the losing stocks today. Dalmia Bharat, they have got JP Group's cement assets. It's a good deal, right? Then why is the stock under pressure? Because the street has various concerns. First up, why didn't the big boys like UltraTech Cement and ACC Ambuja go ahead and bid more aggressively? After all, the valuation-wise is looking pretty good. Second up, what about the capex? How much do they have to spend to get these plants up and running? That's a question mark. Then out of their total clinker capacity, you have the Dala Super facility in Uttar Pradesh, which is 2.3 million tons odd. That's still locked in arbitration with UltraTech Cement. So clarity on that front is awaited. And there's a Billai JP Cement Limited. That's a JV between SAIL as well as the JP Group. Now, SAIL out there has close around 24% stake. Will SAIL bargain hard for that 24% stake? Then there'll be an additional outgo that goes out there. And last couple of points, well, there's clarity awaited on the limestone reserves as well as the land in case they want to expand from here. And both these two parties, they're on board. But what about the lenders? Will they give the green signal to this deal? All these factors put together, Dalmia Bharat has come off a little bit from the top. Well, Siddharth, tell us, what's your view on this deal, first of all? And what about Dalmia Bharat? How do you approach the stock from here on?
Good afternoon, Nigel, and thank you for having me on the show. The deal happens to be a lucrative deal for Dalmia Bharat, and when you pointed out that why the other biggies of this sector are not bidding for it, other biggies are going after other companies and where they are using their balance sheet to get that deals done. So I think this would be a win-win deal for Dalmia Bharat because of two counts. One is they are broadly present in East and South. So this deal will bring in their presence in UP or Central India for that matter. Added to that, Dalmia Bharat already has a plan to reach from 39 million tons to 49 million tons in next 2 years. So this deal will definitely help them to increase their capacities. Of course, capex is required. That is to the tune of 3,000 crore capex, which is required. But overall, organically, also this company has been doing good. 12% volume growth we've been seeing. I think going ahead also we may see 12% CAGR volume growth, 15% revenue growth. So we are positive on Dalmia Bharat. The reason behind why stock is falling, I think sell-on news added to that, the stock has moved quite considerably well in last 3 months. So we can see a little bit of a profit booking. But from a 1-year perspective, I'm very confident on Dalmia Bharat with a target of 2160. I believe that this the entire cement pack will be doing good, including Dalmia Bharat, and this deal will go well with the company.
Okay, making it a pan-India player. Siddharth, hi, afternoon. What about IT stocks? Today you are seeing a rebound. Do you think the worst of the price damage, the correction is in? Although we may have some more bad news by way of furloughs or perhaps the Q3 earnings may not meet expectations. But in terms of price damage, do you think the bad news is in the price or does it get worse?
Well, hi, Rima. Well, overall perspective, it would be a stock-specific way ahead. Broadly, prices, the negatives are priced in. But Q3 results, as you rightly pointed out, can be very much stock-specific. But broadly, the kind of spends we will be seeing in US will give us a road ahead for the IT and tech companies. Broadly, it's a contra play, and it's not a contra play from today. It's a contra play since 3 months, and I believe one should accumulate IT and tech companies in their portfolios because of a reason that now from here on only the spends, what kind of a spend cut or spend rise is coming in the month of January is one thing to see. Added to that, the December quarter result will give the last signal that how to go about with these companies. So broadly, I am quite confident on the technology companies, selectively on the large cap, and broadly very confident on the mid cap arena.
Siddharth, hi, good afternoon. The other space is the PSU banks, right? What rallies they are seeing, Siddharth, and even names like UCO Bank, which were the absolute the bottom rung of asset quality, etc., coming back very, very strongly. And of course, I mean, the good ones, Bank of Baroda, Bank of India, all of them are good ones now. If you look at the prices, UCO, by the way, is limit up 20%. Now, in the last 1 month, it's up 92. It's quite amazing. More left here, Siddharth, or what's your sense? How would you rate these names now?
Hi, Prashant. I personally believe the rally is broadly done because now it's a catch-up game which is going on in all the banks. As you rightly pointed out, UCO Bank is last nail in the coffin, which is catching up. So broadly, I am saying that PSU banking space, again, you have to be very selective. Still, there are a lot of GNPAs and slippages in the system of PSU banking space, although there is a turnaround. Credit growth is coming in the broad-based banking space, and that's why we've been seeing some improvement in the PSU banking space. But I would still put my neck out and stick to some large caps in this PSU banking space as an investment team. For a trading positional point of view, one can bet on the smaller banks, as you are rightly pointing out. But I would put my neck out and stand by with State Bank of India with the investment point of view. The rest, I would book some profits off the table.
Okay, all right. Siddharth, request you to hang on. Let's focus on another space, the real estate space. Macrotech developers, well, it's a little bit lower in trade on the back of, we have real estate demand concerns, whether or not that could be a bit of a slowdown. Earlier today, we spoke to the management. They gave us a sense about how demand is shaping up. Mr. Abhishek Lodha, MD and CEO of the company, says that he sees office demand will see an uptrend from year on, though there could be a short-term impact. Let's hear him out.
Well, I believe that India's economy is going to do quite well over the next 10-15 years, and therefore office demand in India, as well as retail, or for that matter, any real estate asset class, will do quite well. You could have short-term aberrations due to factor X or factor Y, but the medium and long-term is very good for any asset class in the real estate space. We believe that demand is not very closely linked to interest rates. We'll have to take into account the fact that a mortgage is a 20-year, home loan is a 20-year product, and therefore the starting interest rate makes little difference. Over the 20-year period, rates will go up and rates will go down, and therefore homeowners, if they look at it very, very pragmatically, there's no reason to get swayed by the current interest rate. We believe that home demand is very closely tied to job creation and job confidence, and not really closely linked to mortgage rates or interest rates. We've seen that as rates have risen from 6.5, 6.75% now to 8.3, 8.5%, demand has actually continued to.
Your take on this space? Will you look at real estate stocks, or would you look at some of those ancillary plays?
Both of them, in fact, Nigel, and I concur the view of the management. I think real estate have seen quite a rough patch after demon, then after we've seen COVID coming in. I think this pandemic and everything has slowed down things, but now they are catching up in the direct real estate pack. We like something like Godrej Properties, again a leader in this space, strong balance sheet. The 4 projects which they launched in the Q2, 2 in NCR, 1 in Mumbai, I think 50% of the pre-sales has been already done of Godrej Properties. So Godrej Properties kind of play I would like to go. Ancillary plays are also there where I would like to put my neck out in finding out some kind of a wires and cables player like Polycab, which is again buzzing today. Added to that, Supreme Industries, which is again into the pipes division, doing fabulously well from here on. So ancillary plays also will be a great play added to that direct real estate play likes of Godrej Properties.
Siddharth, do you look at Aditya Birla Capital? There was some news about reported by the agencies that how they are weighing selling their insurance and brokerage unit. So, do you track this and do you think this is going to have a material impact on the stock?
Well, we don't track Aditya Birla Capital and neither have a target on this, but the stock has moved after a lull period of many years and now things are moving up. And I think on the back of the news which you are alluring to, I think things are moving up well. If somebody is having in their portfolio, I think they should wait out because of the biggest reason that stock has come up after a long time. So wait out for a quarter or so, but don't forget to review it out in terms of the quarterly performances are concerned.
Right, it's in a smart up move, but I think it's still below its IPO price. So that stay with us. We'll take a break here, the first on the show. We'll come back. We'll put the spotlight on Tata Motors on the back of their new sort of plans with regards to Tata Tech IPO. We'll also track market technicals. Jay Bala joins us Tuesday afternoon, so that conversation comes up as well. Stay with us.
Welcome back. The Nifty is at at that 18,578, a gain of close to about 80 odd points. It's been another quiet session for our markets. The high on the Nifty, the all-time high level, was taken out on 1st of December. And since then, over the last 7 or 8 trading sessions, the markets have been moving up either a couple of percentage, 0.1, 0.2, 0.3 percentage points, or perhaps on the way down. So things have been relatively quiet. Remember, this is the last big week of macroeconomic indicators. Next week onwards, for the last 2 weeks of this year, it's going to be very quiet in terms of news flow. So perhaps this listless trade that we are seeing may just extend because the news flow is going to completely die down. All the action is in the PSU banks, Dhanalakshmi Bank. Take a look at that intraday chart. Central Bank, FACT, a fact has rallied close to about 30% so far this month. Ujjivan Small Finance is another big mover. And in the Tata Group, it's Tata Communications. Well, there is news on Tata Tech, and that's related to Tata Motors. But Tata Communications is another stock that's very excited in trade. But let's talk about Tata Motors then. That's up close to about 1.5% on the back of its divestment plans. The Auto Majors Board has given its initial approval for a partial stake sale in Tata Tech. Sonia is here for more on this. Sonia?
Well, thanks a lot for that. As you rightly pointed out, the Tata Motors board has finally gone ahead and approved the divestment of Tata Technologies and will go ahead with an IPO. This is a long time coming. Remember, way back in 1989, Tata Tech was incorporated as a subsidiary of Tata Motors, and Tata Technologies is a product engineering and digital services firm, and Tata Motors holds about 72.5% stake in Tata Technologies. Now, this listing perhaps is also on the back of an increase in demand that we've seen for electric vehicles as well as for the aviation sector, and hence it's perhaps the best time for this listing to take place. As per Tata Motors annual report, the investment in Tata Technologies stood at 224 odd crores, and this is important because it's the first IPO from the Tata Group stable after 18 long years. The last one was way back in 2004 when TCS came out with their IPO. Now, the analyst feedback is that this is at best sentiment positive for Tata Motors. They value Tata Technologies at 20 times PE as per the FY21 earnings, and if they apply a 20% holding company discount, then this can lead to an upside of 31 rupees per share's fair value. That's a note coming in from MK. So that's perhaps the upside that you're seeing on the stock. At best, a sentiment positive, but of course, big deal for the Tata Group because after 18 years, there's an IPO coming out.
There's interest in Tata Motors and there's interest in Tata Tech itself, right?
Yeah.
Arima, I mean, tell us a little bit about the company.
Well, this is an IT services company. So historically, it would provide services to the automotive businesses of the Tata Group, right? Tata Motors and now JLR. So predominantly, they used to get a majority of their revenues from these captive clients, which are Tata Motors as well as JLR. But now increasingly in the last couple of years, the company is focusing on bringing down their dependence on these captive clients and focusing on other clients. So if you look at the captive client contribution, it was more than 50% in FY20 and it's come down to 36%. It caters to not just now the automotive segment, but industrial heavy machinery and aerospace. It's a big business. It's profitable as well. Revenues as as of FY22 were 3,500 crore. The profit after tax of 436. In the first half of the year, revenues stand close to about 1,900 crore rupees. It's cash positive. It's got a cash balance of more than $165 million as of FY22. They're more than 9,300 employees. They're headquartered in Pune, but they cater, of course, to a lot of clients. This would be the third IT company which could be listed from the Tata Group. The crown jewel is TCS. TCS's FY22 revenues were 1.9 lakh crore. Okay, so that's in another league. But if you compare Tata Tech to Tata Elxsi, Tata Technologies' FY22 revenues are more than that of Tata Elxsi. So the third IT company from the Tata Group which could be listed on the domestic bourses. So that's a little bit about Tata Tech, the new kid on the block to be. Siddharth, any thoughts on Tata Tech, any impact on Tata Motors? Siddharth, can you hear us? Siddharth, can you hear me? Wanted to get your thoughts in on Tata Motors' plans to come out with an IPO for its subsidiary Tata Tech, where Tata Motors has close to about a 72.5% holding. Any thoughts on this development, this move from the Tata Group? Okay, we've snapped that connection with Siddharth, so we'll try and reconnect with him. But for the markets, as I said, the Nifty has given up a bit of ground in the last 1 hour, but the mid-caps continue to go very strong. The mid-cap index, in fact, has now moved to the high point of the day. It's a gain of close to about 150 odd points. The big winners that we are seeing in the Nifty pack, Adani Group stocks are moving up. So Adani Ports is now the top Nifty gainer, a rally of 1.7%. A couple of auto names like Bajaj Autos has rallied close to about 1%. So that's surging up.
I mean, and by the way, the Nifty is up 90 now, Rima. So there is a little bit more in terms of impetus which is coming through as we approach that 3 p.m. mark. Around a lot of action around that 3 p.m. mark. And today seems to be no different so far. 18,587 on the index. Jay Bala of cashthechaos.com is with us as always on Tuesday afternoons. Jay, good to have you with us here. There was this kind of divergence between what the Bank Nifty was doing and the Nifty was doing last fortnight or so. And looking at today's price action, although 1 day is too early to conclude, looks like the Nifty is picking up. Maybe will continue to pick up all the way to what the Bank Nifty has been doing, which has been the stronger of the two. Your sense near term, Jay, is that the way you read things, or this is more consolidation still?
Yeah, quite obviously, Prashant, the Bank Nifty is stronger than the Nifty. The Bank Nifty might still have little more, highs to come through, but not so sure about the Nifty. From the State Bank's price structure, I think one more higher high is due for State Bank. So that might push the banking index somewhere close to 44,700, maybe even 45,000. But Nifty is weaker than the Bank Nifty, and there's marked slowdown there. But we still don't have a trend reversal yet, which I've been saying for the last 3-4 weeks. 18,130 is critical for the Nifty's uptrend. As long as that's protected, continue to maintain that the market is going up. But from a personal view, I think the break of 18,420 is a small crack in the strength of Nifty. So I pointed out 18,420 is important from a short-term perspective. We saw a brief intraday move below that, but from the point of trend reversal, yes, it's not come through, but some weakening is happening for the overall market.
All right. Hi, Jay. Just coming back to you in just a bit. We had some clarification coming in from the Delhi government that was done for our viewers, and we'll get my colleague Tim C to join in and clarify that. Just one clarification, the number of tests have gone up in terms of, what is being offered at a lower rate or as freebies. But it's restricted just to Delhi government and Delhi outlets out there. So, just keep that in mind as well. We'll try to get in Tim C in just a bit to clarify on that. In fact, Jay, just hold on. We have Tim C who's joining in. Tim C, clarify this to us. The reason we are calling you is because, Dr. Lal's, that stock is under some pressure, but it's restricted just to government outlets?
Well, yes, as you rightly said, the clarity is there that currently there are 212 types of tests which are conducted at Aam Aadmi Mohalla clinics and over 250 in a few hospitals and super specialty clinics. But through this expansion, that is expanding the list where Delhi government has now expanded these 212 tests to 450 tests, this will be able to give Delhi people a sort of a relief, and these are only at government outlets. Which are these government outlets? Aam Aadmi Mohalla clinics, that is AAMC, then other Mohalla clinics, the polyclinics and mobile health clinics, which are run only by Delhi government in Delhi itself. So very clearly not applicable on private players or private polyclinics or private clinics, etc., private hospitals. And yes, this also includes the private path labs, as you rightly said, when it comes to Dr. Lal. So these are only at Delhi government-run specialty hospitals, etc. So the list has been expanded from 212 tests to 450.
Okay, higher number of tests being offered, but only restricted to Delhi government-run outlets. Well, thanks a lot for that, MC. Well, Jay, you were giving us your targets on the Nifty itself. 18,130, I think so, on the downside was important on the Nifty. But a crucial element is going to be what happens to Brent crude prices. And to our relief, it's come down drastically from around that $110, $120 all the way to sub $80. Where do you see that one headed? I believe that in the medium term, you believe that is likely to trend even lower?
Yeah, that's right, Nigel. I've been maintaining a bearish view for the Brent variety for several months now, but the short term has been quite slippery. But I think from a 6 months plus perspective, we are heading somewhere close to 44 for Brent, and we're going to see intermittent bounces. The low that we saw yesterday, before today, about 75 odds. I think we might see a little bit of bump up somewhere close to 87 to 90, and then it might resume the medium-term downtrend. But the short term has been slightly difficult to trade, so watch out for this. But the overall trend is strongly drawn.
Jay, the rally that we were seeing in IT names has come to a screeching halt in the last 1 week or so. And I think even the last time when we had chatted, you had indicated that perhaps mid-cap IT, some of the names like Persistent, etc., were offering value. What is the trade now that you would recommend on IT?
Yeah, it's a very important juncture, Rima. See, if the IT index manages to hold about 28K, I would consider this as a bullish consolidation. The pullback that we saw the last couple of sessions, which was strongly lower, as long as it maintains about 28K, it will be bullish. And we want to see the index take out 30,700. If it does that, then we can take a stronger medium-term view, a bullish medium-term view. But if 28,000 were given, it damages the medium-term structure. So from that point, 28,000 is very critical for the Nifty IT index.
For the Nifty IT index, okay, got that. Any thoughts, Jay, on, have you looked at Dr. Lal Path Labs, by the way? There was some news flow.
I even tweeted about it several weeks ago, Prashant. I have a medium-term price objective close to 1,800, but 2,250, that's very critical. If that value given, the medium-term second leg of the downturn from the all-time high is confirmed. I think the recent high it saw somewhere close to about 3,000. That itself has a good probability that it is marking the end of a counter-trend bounce. And as long as it holds about 2,250, it's a bit safe. But if 2,250 breaks, we are looking at somewhere close to 1,800, 1,700 for from a 3 to 6 months perspective.
That's a technical view, not based on the news flow, just to, of course, be clear to the viewers. Jay, just a quick word, if you looked at PSU bank charts and the frenzied move that we've seen, I mean, it's obviously almost impossible to pick tops and bottoms, but how do you, in this kind of frenzied phases, would you wait for exhaustion to set in? What indicators would you use to say, well, this is finally getting to the fag end? I'm not suggesting it is, but I'm just asking you, as an analyst, what would you do?
Yeah, see, basically, if you're long, you can continue to hold on to those PSU banks. The main propellant for the Nifty banking index is coming from the PSU sector. And the momentum is strongly with the PSU banks still. We haven't run into a bit of exhaustion. At least a sequence of higher low and a higher high is pending for the Nifty PSU banks. Once that is done, we can evaluate if that is signaling an exhaustion. But at the moment, they are still trending up. Central Bank, Canara Bank, Bank of Baroda, everything is trending up.
Okay, very quickly, Jay, what about the dollar index, the currency space? That as well is crucial, right, from equities perspective. Where is that one headed?
Yeah, I'm working with the probability that we're going to see one more lower low, most probably only an intraday low below 104.11 we saw last week, and then we're going to see a reversal. But we got to wait for a move past 107.11. This is the cash level, not the futures level. Once that is taken out, the uptrend for the dollar index will resume. But so far, the structure is pointing to a possibility of an intraday low below 104.11 and a reversal.
Thank you very much for joining in, Jay. Need to get into a break. On the other side, we'll invite our Alpha Manager for the day, Trideep Bhattacharya of Edelweiss AMC.
Welcome back. Well, it's going to be a good close, it appears, at least as of now. A few stocks have moved higher, and that's why the Nifty is now at the high point of the day. We're holding above that 18,600 odd mark, and that'll be pretty good news. Asian Paints, just take a look at the intraday chart out there. That stock has moved higher. Reliance Industries as well is batting for the bulls. And TCS, the other stock that's moving with some traction. So pretty good going on that front. But let's get chatting about the markets. Then we have Trideep Bhattacharya, Chief Investment Officer, Equities at Edelweiss AMC, who joins in. Hi, Trideep. Always good speaking to you. Well, you've said in the past, the financials are in a sweet spot. And valuation-wise as well, you're fairly comfortable out there. But from the last time we chatted, well, that index and those stocks continue to go higher. What's your take? Do you allocate incremental money out here? And particularly, what about the PSU banking names? The party is on out there.
Yeah, I think, first of all, thanks for having me on your show. Always a pleasure. Yes, we have been overweight financials as much as possible in our portfolios, and that's worked out well so far. I think heading into Q3 and Q4 numbers, I would probably keep on those bets. And I think from a next 3 to 6 months perspective, I would say financials will actually score over some of the other sectors in terms of delivery of numbers. So as you know, we are a big fan followers of where earnings upgrades are likely to come. So particularly the private sector banks is something that we would kind of, hang our hat on and continue to be overweight on in our portfolios. Public sector banks, of course, have joined the rally of late, and there is a valuation catch-up that is happening to different extents, depending on where they were trading at. But I think at some point we would be kind of, a little careful about extending the rally in PSU banks. We are overweight, some of the largest private sector banks in our portfolios and stuff like that. So we are playing this, but we are mindful that of the valuation catch-up, and at some point moving back to a slight bias towards quality.
Trideep, afternoon. Rima here. So after a record-setting equities buying spree over 6 quarters, which almost single-handedly lifted India's equities in an otherwise tough year for emerging market, India's retail participation activity is showing some signs of fatigue. The ex-SIP number has been negative now for a while, the discretionary money. What have you made of the flows, and is this going to be a big decisive factor on whether India continues with its outperformance? And tell us, what are your channel checks? What is it that you are seeing at your AMC when it comes to retail participation?
Yeah, great question. So I would say that, as always, investors follow, in my opinion, where earnings upgrade is likely to happen going forward, in my view. That's where money flows. And I think overall, so far, one of the reasons why money has continued to flow in India and domestics replaced FIIs has been the fact that on a relative basis, for sure, and even in absolute terms, our earnings upgrade story of India Inc. has been fairly robust. I think over the next 3 to 6 months, that will be tested, though. We have seen a good round of rate increases both in the United States and different parts of the world, including India. How that has an impact through the economy in different sectors will actually be felt over the next 3 to 6 months. So I think we've got to be very careful about the earnings upgrade story going forward as well. Certain pockets will continue to do the same, and that's where we are positioned. And we will continue to encourage investors to look for those pockets which can survive through the impact of rate increases onto the economy from the next 3-6 months perspective. But that's the short term for you. Beyond that, I think heading into 2024 elections, the government mood would be pro-growth. The capacity utilization in India is roundabout somewhere between 70 and 75%. So corporates are deleveraged and inclined towards more capex. And finally, the lending part of the financials, having got their books clean, would probably still have a clean run from 1 to 2 year perspective. So putting all of these three together, I would say that next 3 years probably looks pretty robust from an Indian economy standpoint. Next 3 to 6 months, we have to kind of let the impact of rate increases wash through the economy, and then we have a good run from an earnings upgrade standpoint, which in my opinion is what the key metric we should follow.
Trideep, to that point, I think at least retail investors, right? I mean, they're looking through the next, more than 3 years, right? Bring it on, and we'll stay invested and kind of look to reap the rewards 3 years, 4 years, 5 years out. That seems to be, at least so far, that it's been very, very steady flows, etc. Of course, despite the recent volatility and the dip that we've seen on the discretionary side. Now, fertilizer is a space, Trideep, I wanted your thoughts. And not just fertilizer companies, but companies in the food sort of arena. But my conversation today was with the fertilizer secretary. I started, of course, on the fertilizer bill, which is, of course, over 2 lakh crores in 23. The fertilizer secretary told me that they expect the bill to drop in FY24. Of course, I mean, it's a big macro negative. It's a number which is very, very large. Although companies are getting sort of reimbursed on a pretty quick basis, so there is no impact on that side. The other more interesting thing was on, there's nano fertilizers, nano urea, nano DAP, which over the next couple of years is really going to revolutionize the fertilizer sector. Much higher efficiency, and subsidies also will go down to almost zero is what the secretary told me. Listen in, then I'll come to you for your thoughts.
Because of geopolitical considerations in the world and various factors, the subsidy amount has gone up, and it's always a challenge for the government to find funds. But it's a question of priorities. If farmers occupy the highest priority for the government, then the government will ensure that funds are made available. And that has been happening so far. Even though prices have gone up internationally, the government has chosen to increase the subsidy burden and not to burden farmers. So, as I said, the government is fully committed to ensure that sufficient, adequate supply of fertilizer is available to farmers, and it is available at reasonable rates. That commitment is there, and therefore that will translate into action on the funds front also. So I don't foresee any problems. If there is a further requirement funds, we will be going to Finance Ministry, and we have been assured that whatever is required would be provided. It's very difficult to give a number right now because the prices of gas will fluctuate. We don't know what the prices are going to be in January, February and March. And urea, as you know, largely depends on the prices of gas. So we don't really know how much the subsidy burden is going to be. Similarly, the prices of potash and the prices of phosphatic fertilizers also keep on changing. So it's difficult to put a number to it. So prices are coming down, and that applies to phosphoric acid, rock phosphate, everything. So we do hope next year there will be a lesser subsidy burden. And the other important thing, of course, is that we have nano urea now, which is part of the supply chain. So next year the manufacturing capacity of nano urea will go up. We plan to make about 17 crore bottles of nano urea, which are equivalent to roughly 75 lakh metric tons of urea. So that also would contribute to reducing the subsidy burden. We are hopeful for a substantial reduction. Yeah.
So that's the fertilizer secretary talking about the nano fertilizer. Nano urea is already there. Nano DAP is being developed by companies like Coromandel along with government institutions, and that should be out in the market by the middle of next year. Trideep, any thoughts on names like Coromandel, or anything else in that space that you've owned or you'd like to own?
So we certainly kind of, we've been positive on the way the government has been able to really, improve the productivity within the farmers, or at least create an ecosystem so that the productivity is looking to improve. One of the historical setbacks has been that our agriculture sector is not as productive as particularly as compared to when we compare globally, and it adds to a significant amount of subsidy government for the government as well. So net it didn't benefit anyone. But I think what the government is trying to do, if you look at broadly the agricultural sector, whether it is sugar, fertilizers, etc., is to kind of get the bottlenecks out of the way, whether it's through innovation or taking the excess supply out, like in the case of sugar, and enhancing the productivity of the different sectors. I think it is a win-win situation for the corporates, because at the end of the day, they can get what the price that they want, and for the farmers, as the productivity increases, their crop increases, and their total value intake also kind of goes up. So I see this as a long-term positive. Short-term could be a bit of a hiccup for particularly given the elections are there or thereabouts. But one of the things that government has done positively over the last 3-4 years now is not to lean too much on subsidies, or for that matter increasing the fiscal deficit burden, but more towards productivity and more towards structural growth over the long term. I think that has held steady, held good from a market's long-term perspective, and will continue to be the same going forward as well. That's what I would have to say in this.
All right, Trideep, final question from my end then. How are you placed on the IT space? You're getting diverging comments out here. I think just a month or so ago, people were saying maybe the worst is behind. Then the HCL Tech shocker came when they said all of a sudden that we're going to be meeting the low end of the guidance. What's your sense on the space as of now? Stay away, or a good time to build a longer-term portfolio?
I think people are getting a little too excited about the sector overall too soon. I think we are in the bottoming out process over the next 3 to 6 months. And this is one area where some of the global weakness in demand we will come to know in IT budgets, as I've told in the previous interview as well, in the first quarter of next calendar year. Getting ahead of that could be troublesome, which is what we saw in the last month or so. I think as we get to Jan-Feb time frame, companies kind of put to bed what they're hearing from clients and put towards their outlook for FY24. I think there is some more earnings, probably downgrades, that is still to happen before we can say that the sector is safe to invest from an earnings standpoint and also from a valuation standpoint. So a bit more room to go on the downside, but worth keeping the sector on the watch from a next 3 to 6 month perspective.
Okay, one of the important data points to track, Trideep, will be the Accenture numbers. They come out on Friday, Thursday night or Friday. So that's going to be very crucial. It will be Q1 FY23. So will they continue to maintain the guidance that they had given 3 months ago, or is there going to be a guidance cut? So Accenture numbers at the end of this week will be very, very crucial. Thank you very much, Trideep, for joining in. Let's get back to Mitesh Thakkar. He can tell us what you can buy today or sell tomorrow for a reverse trade. Mitesh, there has been that last hour recovery, now 100 points plus on the Nifty. Thoughts on this up move and the Nifty's conquered that 18,600 mark, and any trades that you would recommend?
On the index, I think 18,620 is the breakout point, but maybe, you can take some quantity off because tomorrow might be a gap up day. So that's always a tricky thing. I recommend buying half with a stop below 18,570 on the spot, keeping a tight stop because we are still not sure of a breakout. But having said that, we're still trading with long bias. LIC Housing Finance is a BTST kind of a call. Take a stop around levels of 407, 407.5, and look for targets of 420, 419 for tomorrow. And ONGC is a BTST as well. Keep a stop just below levels of 143 for targets of around 147.
Okay, those are specific trades, trading with the long buyers, but not entirely convinced as yet. Mitesh, thanks very much. We'll come back to you for more later. There's a large order for Dredging Corporation which has come through, 770 crores. Naturally, we're seeing a significant price reaction as well. So it's moved up very, very sharply, almost 25-30 rupees from the time that the order was flashed. Look at the price move, 4.25% higher. Is the price move, almost all of it after that came through. 770 crores for Dredging Corp. That's the order. We'll get more details as we go along, but that's a sharp one. take a break. There's still, 13 minutes to go for market closing. More on the other side.
Well, it's going to be a good session actually and a good close as well. Bharti Airtel has moved to the high point of the day, so good move is what we've seen on that one. IndusInd Bank as well has moved to the high point of the day. And Cipla's the other one that's moving pretty well. We're talking about some of these banking names doing well, and they're piling on the gains. Yes Bank currently up 15%. Central Bank of India up close to around 18%. IOB as well is moving well. So this banking pocket clearly is doing very, very well. I recall a couple of months ago when South Indian Bank was only around 10-11 rupees. Now it's on the verge of going towards 20 rupees. There's just two or 3 months you've seen that stock give you close to around a 75 to 80% return on that stock itself. Well, it's a good time then to get in some opinion. Earlier today we spoke to Mahesh Patil. Let's hear out what he had to tell us.
We have been a bit cautious on the market here, though nothing wrong in terms of the fundamentals. I think the overall outlook on India looks fairly good. We have seen a decent amount of recovery over here. Demand has been fairly strong, and rural economy is also picking up, which is giving legs to the consumption, which was kind of weak last year. And there has been a steady pickup in the investment side also. So all in all, I think the outlook on India looks fairly strong and robust. The relative valuations where India is vis-a-vis the rest of the world, and especially the emerging markets. And to that extent, I think we've seen that recently there has been some amount of trade where money has moved into China, Korea, Taiwan, which were kind of beaten down and valuations were looking very attractive. So relatively, we've seen some flows there from the FIS side. Overall, I think we're still fairly positive on a, say, next 2 to 3 year perspective. We see earnings growth in the region of around 13 to 15% CAGR over the next 3 years. And market should give reasonable returns from here. The banking stocks have done much better. The PSU banks have actually done even better recently because the valuations there were very, very depressed. And we've seen a very, very benign kind of a credit cost cycle. But I think the NBFCs, some of the NBFCs are now, they're still not really done as well because in a rising interest rate environment, we've seen that the banks have actually benefited in terms of NIM expansion, whereas NBFCs have seen some kind of a NIM compression. But as the asset side also kind of rebalances, right, the rates over there, I think we should see the margins on NBFCs starting to improve in the next, probably the first quarter of next fiscal year. So I think some of the NBFCs are now looking at fairly reasonable valuation.
By the way, I have to point out that even though market, the Nifty's moved up, if anything, market breadth has deteriorated. I think it's now 1:1, NSE advances to decline ratio. And I was just looking at the gainers and losers list. The gainers, of course, is populated by a long list of PSU bank gainers. There are others as well. I think we mentioned, yes, there is HUDCO, NCC, etc. But there is a fair number of volume-led losers as well. So that's a little bit on the other side. Lal Path Labs, Jayaprakash has been lower from the morning. KEI, we spoke with Viatech Vabag, there is Laurus Laboratories and so on and so forth. So that is a broader kind of universe to keep track of. Mitesh, of course, is still with us. Mitesh, if one had to take a fresh view or even a fresh trade in any of these PSU bank names, anything comes to mind or just too hot to touch?
Two-hour touch, I think, Prashant. While I like the sector and the long-term and the medium-term charts are very good, but they're extremely overbought now with the rally in the last few days. So I think from a trading point of view, wait for a pullback or a cool down or consolidation before you enter.
Any thoughts on names like Indices, Bajaj Finance? Today there is CSB Bank, which is bouncing quite hard. Anything catch your
eye? See, I think CSB is something, which I was having a look at. Bajaj Finance, unfortunately, I haven't looked at. CSB completed a rounding bottom formation and has broken out. Very positive and a bullish setup over there. I recommend a buy here with a stop below 250 and a target of roughly around 280 to about 285 on the other side.
Okay, all right. Fair enough. We'll leave it there, Mitesh. Thank you very much. I think we're just 3 minutes out as far as market closing is concerned. So let's start wrapping things. So good session, good close on the Nifty. Mid caps doing well, small caps doing a little good, but not as much as what the mid cap index did. About 1/3%. Mid caps, of course, 0.5% and more. Banks, of course, the stronger part of the market, both private and public, mind you. But of course, the PSU Bank rally really just completely wild moves there. Central Bank, UCO Bank, IOB, Punjab and Sindh Bank, Indian Bank, Maharashtra Bank. You can go on. And some of these are up 10%, others are up 20%. So just wild moves, as I said. IT, of course, is the other pack which kind of held out. Many days of lower closing. And today, we got about a 0.75% gain. What was down as a sector, real estate. I mentioned Lodha earlier. Real estate was down, and FMCG, lackluster performance, ending in the red in terms of trade. Rima.
Well, the mid-cap index was up close to about 0.5%. And just to give you an indication of the mid-cap PSU banking rally, the PSU banking index was up 4%, right? That big boy was up close to about 4%. So all the mid-cap gainers were largely in the PSU banking side. But outside of that, FACT, up close to about 8.5%. Even Equitas Small Finance Bank, not a mid-cap PSU bank, but that was up close to about 7.5%. Tata Communication rallied 7%. On the losing side, big cuts seen in RCF, Apollo Tyres, Dr. Lal Path Lab. It trimmed some of its losses by the close of trade, but still ending down. Dabur was down nearly 1.5%. Jubilant Foodworks losing close to about 1.3% on pretty large volumes, Nigel.
Well, that's right. A few more gainers just to add to the list. BGR Energy, well, the stock ended high with a gain of 20%. They had won an order, so that one went flying away. You had Hoodco that was up close to around 13%. CMAC as well was up close to around 13%. Volumes larger than normal out there. And Fino Payments Bank was locked up close to around 10% odd. So it's a good trading session. We ended closer to around that 18,600 odd mark. The breadth of the market was in favor and the number of stocks advancing, though mildly so. The mid-cap index ended with a gain of close to around 0.5%. And if you just line all these indices up, the Nifty Bank, as well as the mid-cap index, all of them went home with gains of close to around 0.5% odd. Well, the bulls will be pleased getting into the big event. The Fed rate hike will be eyed. That's what we'll know in the next 36 hours or so. So pretty good going out there in trade. Just to highlight a few losers as well in today's trading session. Well, we had a couple of them actually from the F&O basket itself. You had Lotus Labs that was down. Dalmia Bharat was under some pressure, and Can Fin Homes as well went home with cuts of close to around 2.5% to around 3% odd. So we'll wrap up on this edition of Closing Bell on that note, but you don't go anywhere. Our Tuesday special, Commodity Champions, comes up next.